Hey traders, welcome back to Pips and Tips. Today I'm going to show you a powerful but simple strategy using the 8 EMA with a shift of 10 combined with 5 EMA on the 15-minute chart. The real magic happens when we combine this crossover with key support zones or liquidity levels. Like I've been saying, liquidity is everything. Liquidity is what actually moves the market. Some of us who have been struggling with false breakouts or poor entries, this strategy might be the missing piece left into it. Yes, so I'm going to break down the strategy. So let's start with the indicators. So today we'll be using two EMAs. The first one, which I said will be having the period of 8, and then I'm gonna shift that indicator to have a shift of 10. So let's get right to that. So you come to your indicators tab and you search for EMA, this one right here, moving average exponential. You put 2 on the charts. Yes, so for the first one, go to settings, then come to inputs. For the first one, you're taking 8, and then for the shift, you're taking it to 10. We'll give it a style of red, and we'll take in the line a bit. Then you hit on OK. For the next EMA, you're just going to put the input as 5. At this time, we'll leave the shift at 0. We'll go to the style and make that gold, and also take in the line. Yeah, so this is how it's going to be looking like. Yeah, so what we'll be using this strategy and how we'll be using it is that we are going to be combining it with support and liquidity levels. If you've watched my videos, I always talk about liquidity, and I said liquidity is everything. So we're not just going to be entering on every cross we see. We're going to combine it with confirmation with a liquidity sweep before having an entry in a targeted direction. So when I say liquidity, what do I mean? These are the areas where price has previously bounced or consolidated. Places where big players leave orders. Sometimes you will see a fake out, a wick below the support to grab stop losses. That's a liquidity being taken. Once price returns into the zone, that's when we'll be looking at these indicators. The 5 EMA crosses the 8 EMA upward. We take that as a strong buy signal, something like this. The 5 EMA crosses above the 8 EMA. After the liquidity sweep has been done, it swept this low over here, took that liquidity from this low, and then targeted towards the next liquidity level, this level. I actually took this trade myself. This was done on the Asian session. Yes, so after that cross happened within this liquidity level after sweeping this one, then it just took off all the way. And then you can see right here too, right here, after this liquidity had been taken right here, then you can see as it came back, it came to cross again at this point, and then see what's going to happen. It's continuing downward to the next liquidity level. It could possibly even cross to sweep this liquidity right here before heading back, maybe on the next day or the next session. So for instance, if you are to take this trade, wherever the cross happens on the chart, you should place your stop loss either below the lows that was created and nothing more than 20 pips, just below them. Yes, below the lows after the EMA have crossed. Then same applies for this section. When it cross, put your stop loss above it, nothing more than 20 pips, and then target the next possible liquidity level. Yes, the next possible liquidity levels. You target the next possible liquidity levels. So like I've been saying, you shouldn't be in a rush in trading. Trading takes a lot of patience and time. You have to just wait for price to come to you. You don't chase the market. You just wait for price to come to you, and then you just execute at a reasonable price, and then it will eventually go in your favor. Trading is not supposed to be so complicated. You just have to look at past information that the market gives, and then based on that you can actually determine where price is going to move after a period of consolidation or after a liquidity sweep. So that's how we're going to be using this indicator. And another thing, when using this indicator, you could either hold your position to when you reach your profit target, or you can also hold your position until the EMA crosses back again. But I actually recommend either targeting the next liquidity level to close or when you reach your profit targets. Yes, when you reach your profit targets, that's when you can decide to close. I have also personally actually tried this strategy on BTC USD, and I see that it works also good on that pair. And then most times when trading with this indicator, at most times, especially with BTC, whenever there is a cross of the EMA, don't immediately go in for a buy or a sell. Wait for a retest or a pullback after the cross to then go into the trade that you have planned to take. Yes, so that is all for this video. I hope you guys be able to understand how this EMA works with this liquidity zones and support levels. So every time the market goes in your direction, that's what you're going to be using to take your trades. So yes, that is it for today. See you next time.